live. Welcome back, ladies and gentlemen. Give me one quick second. We have sound. It's no good. Running power down. I'm going to chime you in as soon as we finish. Okay? You got it? Thank you. God bless. Okay. So, we want to take a second. Let's unplug from here. This is going to go right over because I have a hour like a week. I don't know where, but I'm having issues with all my systems. Is it that we are just working so hard per day? Could be, but we are going to start 2026 off right here early. So we're gonna celebrate right here. All right. Before we start the day, start with a prayer. You ready? Thank you, Heavenly Father, for all the blessings in our lives. We thank you, Heavenly Father, for all the blessings in our lives. We worry not about what we don't have because we're in the process of getting it. And in that journey, everything we do is in your name. Check me out. It's all about the Gators, baby. Amen. Amen. Um, yo, it's about to go down. Check me out. Check me out. Check me out right here, yo. Check me out right here. Boom. Look what we got. Mr. Sorreto's in the house. Ooh. Nice. We got over here, Rudy. I literally think I threw out the receipts. All my charges. Whoa. Look at this. 5 creams, 5 sugars. Um, we're going to New York. These are my 1 day stickers. Yesterday I got 633. Today I got 212. Okay. Go, Gadget Bloomberg.
It doesn't feel important when I'm in the booth, or maybe I'm saving it for the next project. So I think it explains itself. People learn through the years, that we are light years into the future. So it takes a while for some people to catch up to what you're doing, and you got to let that be because it's a learning experience for them. And then they realize they're trying to do the same thing you did. And then they wind up being in that same position you was at, and they realize how hard it was for me to do those things. And then they go, that's a new earned respect that they'll have for me. So sometimes I think about addressing it, but not that much. It doesn't really bother me.
Facts.
You can't fix everything. You can't. You just have to let things be sometimes.
No certified TV.
Very good.
There was times where I felt unctuous. I didn't know what that sounded like. I didn't know what that felt like. I was not living a life of obedience, not to him. And so I had to get to the end of myself and say, okay, you know what, God, you go ahead and try this.
My wife.
Your girl can't try that. I can't for me because I still want to drive. Because I'm letting him drive. I'm like, okay, where we going, God? I don't know. You didn't give me no GPS, no map signal. I don't know where we going and when we get there and how we gonna get. God, this don't look like the way you ever have them like passenger drivers. Like that's
My wife
how I
is
am.
a therapist. She be acting up, y'all. She be acting up. All right, let's go with Wall Street Journal while we look for.
If you love to travel, Capital One has a rewards credit card that opens up a world of possibilities. With Venture X, you earn unlimited double miles on everything you buy. Plus, get premium benefits at a collection of luxury hotels when you book on Capital One Travel. Capital One, what's in your wallet?
We're in the midst of a turnaround is we kind of just lost our focus. You know, the focus for Starbucks historically was all about creating that third place where there's a moment of humanity, whether it was between work and home or whether it was a place that you just wanted to have a moment.
Leadership Institute. Let's see what they got for us. Let's send this along to
You're 1
management.
year in.
Shout out to TMP.
Yep. Clearly one of the most iconic brands in the world. Pretty familiar to this group, as you saw by the show of hands. You've called it a turnaround. What's the problem you're trying to solve?
Yeah, well, first, thanks for everybody that went to Starbucks in the last week. I saw we've got some work to do where you go more than once. But, yeah, look, the reason why we're in the midst of a turnaround is we kind of just lost our focus. You know, the focus for Starbucks historically was all about creating that third place where there's a moment of humanity, whether it was between work and home or whether it was a place that you just wanted to have a moment. And, you know, I would say COVID really kind of took the soul out of Starbucks because the challenge became, well, maybe you're not supposed to socialize the way we historically had encouraged people to socialize. And I think we were slow to recover coming out of COVID. And we made some decisions that started to pull, I think, that third place experience, those moments of connection, those moments of humanity in the store out. And we became too much focused on transaction and convenience and not enough on community, connection, craft, the things that really are unmatched at a great Starbucks.
But let's talk about that a little bit because you do have the people who use Starbucks as a third place. Then you have people like me who love the app because I can order my coffee, get there right when it's ready, minimize the amount of time, and grab it and get out of the store as quickly as possible. Those are very different customers.
Well, they are, but I think at the end of the day, we will get more customers to do the grab and go experience if the way the company is defined is through its cafe experience. I do firmly believe that even if you want to come and grab and go, you'd rather grab and go from a place than a soulless experience. And, you know, if you did go by 24th and M, you know, that's an example of a place that got caught up in a remodel where we removed all the seats. Now, the good news is the team that's in there provides tremendous connection. Hopefully, when you walked in, you were greeted. They were great. They were great.
Okay, good. By the way, they don't do that in New York. We'll get back to that.
Well, yes, okay.
At 24th and M, they were fabulous.
Well,
I'm greeted me by name.
We're working hard on that, Alan. We'll get there. But I do believe you need to have these access points, right? The drive-through, delivery, mobile order pickup, the cafe. But I think the thing that defines the soul of this brand is the third place experience, that great seat. I think every one of our coffee houses, for the most part, should have a spot where when you walk in, you see a seat and you're like, when that person gets up, that's going to be my seat. You know, I also believe there should be an element of like, they know the barista, whether they know them by name, they feel like they know them. And that ultimately creates this community connection that frankly, I don't think you get anywhere else. And I also do believe, I just saw like Australia banned social media for people under the age of 16. What I've seen over and over again is whether you're 16, 12, 24, 40, 80, people like to be around people. Even if that means they're not actually going to socialize with other people. Like I've seen plenty of times, a person's in their headphones, on their computer. They could do that anywhere. They choose to do it in a space where it's a public space. And if you go back and look at time, right? The Spanish Steps, people loved being around people. So when you go around the world, you see these places where humanity likes to have connection. And I think we can bring that to life.
And you don't think that conflicts with the desire for convenience?
No, we should be able to do both.
You think you can do both? You and I had this conversation at the beginning of the pandemic when you were at Chipotle. The way you solved it, as I recall, the way you solved it at Chipotle was say, we're going to build a separate kitchen. We're going to deal with the takeout business over here so as not to disturb the in-store experience.
That's right.
I mean, have you thought about that for Starbucks?
So it's a similar challenge at Starbucks. The difference is, one thing I've learned over the last year is our espresso is really the thing that we have to organize so that if you're ordering in mobile or you're ordering in cafe, we can sequence those orders correctly so that we're on time for the mobile order, and then we're also timely for the customer that's in cafe. And you can do both of those things. We call it our smart queue technology, which literally is just sequencing orders so that our baristas are set up to be successful. The other thing we're testing right now too is allowing you to schedule your order. So if you know you want your coffee at 5:30 a.m., ideally it takes out some of the unexpectedness if you can basically pre-order that 5:30 a.m. coffee, because now we can already queue the orders.
You just feed it into the queue at the appropriate time to make sure it's
ready. That's right. So then the ticket comes out, and then the barista, it doesn't matter to them whether they're doing a mobile order or a cafe order. What matters though for the customer is the mobile order expectation is you got to be on time and accurate. The in-cafe customer, they want a little bit more connection, and then they also want to know that you're going to be timed.
And what's the breakdown between the I want convenience customer and the I want community customer, and is it changing?
It's changing. So the way to think about it is 40% of the business is drive-through, 30% is mobile, and then another 30% is cafe.
So 70% are there to get their coffee and move on.
Correct.
And is that growing?
But remember, 60% are coming into the store because the mobile order pickup customer comes into the cafe. And that's why I think it's so important for you to have that experience when you come into the cafe.
It's the first year. I'm sure, a giant company like this, the first year, lots of things happen that you didn't expect. What's been the hardest thing about this turnaround for you so far?
I was just talking about this with Mike a little bit. I just underestimated the scale and the magnitude of people. We've got 250,000 employees, and we call them partners in the United States. So in order to get everybody on kind of the same path, it takes a little bit longer adoption curve.
And you have like 50% turnover too.
We have 50% turnover, but luckily our coffee house leaders, the turnover is more in the 20% range. So those are the folks that are actually running the coffee house, setting the culture, setting the standard. The thing that's been nice is coming up with a simple strategy around the idea of back to Starbucks. Just by saying back to Starbucks, that gives a visual understanding to our partners of what we're trying to achieve. Because everybody remembers like a Friends episode or that coffee house experience that by me saying back to Starbucks, that kind of harkens that memory of
thank you so much.
Barista customer connection.
Everything is good. It's just freezing outside.
There's a lot of other things that have to happen in order to enable that. But if we just get to a place where every single one of our partners treats you when you come to a coffee house and creates a handoff moment, we are way ahead.
Let's talk about the people challenge, because that's, as we talked about last night, that usually for all conversation about technology, it's usually the people challenge that becomes the hardest. You got more than 250,000 people, right?
Yeah.
We've already talked about 24th and M. Whatever you did, it was right. But most of the stores I go to in New York don't have the same level of friendliness. How do you get that consistent across 40,000 stores, 250,000 people? How do you possibly do that?
Look, the way my experience has been is you do have to get people to understand what the standard of customer service is that we're after. And things that really kind of bummed me out or surprised me when I first got to Starbucks, and I asked the question, what would you say is a great customer service company? Or maybe I'll ask this audience, who would you say is a great customer service company? Anybody?
McDonald's.
Nordstrom. Chick-fil-A.
McDonald's.
Home Depot.
Home Depot.
Disney, okay. Four Seasons. What's interesting is some of those companies, some customers would say maybe they were in the past. Others would say maybe they're having a moment.
Yeah.
But I don't think there is the defining customer service company like there was when I remember Nordstrom's actually was.
Yeah.
And I actually am disappointed nobody said Starbucks.
Yeah.
Because if you go back 10 years ago, you would have said Starbucks. And I simply believe we are on a mission to be the defining customer service company in the world. And when you set that standard for those that want to join your company, you're also sending a message of who we want to be working at our company. If you don't like customer service, you're probably not going to like working at Starbucks.
Yeah.
And so we're in that transition of getting people to understand that. And it was actually funny. I was reading a Reddit thread
5 years the pandemic.
On
so that means the company was on a decline before.
And they were like, hey, I'm about to have my second interview. And we've instituted where district managers also have to be part of the interviewing process. Like, what's one of the questions I should be prepared for? And they said, oh, you better be prepared to talk about how you like customer service.
Oh.
And so when I saw that in the Reddit thread, I was like, okay, we're making progress.
The message is getting through
on what the standard of services that we want.
Do you have any way of measuring it? When I walk in and out of a store in New York and nobody looks at me, do you know?
Well, so we've just started a new program. It's called the Growth Scorecard. So if you go into a store, we're actually keeping very simple metrics in place for people, where one of them is basically customer satisfaction. And so that is one of their key metrics that they have to get a score on. And it's twofold. One is customer feedback. The other one is just reading Yelp reviews, Google reviews. Frankly, this is where we're using technology to have a better understanding of what people are saying about each individual store. But look, the early signs are we're making really good progress.
I know that
it sounds like I have some work to do for your store.
Yeah, I'll tell you which store. But 24th and M is great. You need to go over there and congratulate them.
I think you need to move.
Further south. Further south. I can. But I know it's only a small portion of your employees who are unionized. But Correct. Is the union a problem for you in making the people transition?
Obviously, people have the right to unionize if that's what they believe is right. The thing I've decided that we're going to make sure we focus on is we have to have the best job in retail. And when you look at what we offer at our company, there is no doubt we are providing one of the best jobs.
Still true. That's still true.
100%. We offer healthcare benefits when you work 20 hours. Wow. You can get a 4-year college degree from Arizona State completely free.
Wow. 4 years. I remember when it was 2 years.
You get 20 hours. We have parental leave
for
our hourly employees, 18 weeks,
back
just
in
like
the days, you
find in most big corporate jobs.
I remember 4 years.
So, when you stack up all the benefits and then the pay, which, by the way, we pay well above minimum wage across the country. And in fact, on average, I think our wages are $18, $19 an hour. And then you layer in all these benefits. I know you mentioned 50% turnover. For everybody, a comparison in our industry, most people have 120% turnover. So just the fact that people aren't turning over also indicates what we're providing. And I was speaking with somebody earlier before, she mentioned to me when she was between college and getting her journalism degree, or journalism work,
so for my
she was working at Starbucks because we provided
almost
her
everybody
an opportunity
quits
to work for 20 hours, get full benefits.
20% come back.
I think she even said she was a coffee master, which is, if you see people wearing a black apron, they've gone the next step. I'm really proud of what we provide, and we're committed to continue to make sure.
A lot of that, of course, was central to the vision of your founder.
Yeah.
Can you talk about your relationship with your founder?
Yeah, sure. Howard and I, it's been actually a really good relationship. He's been very supportive.
Some of your predecessors had a little problem with that. I guess all of them.
Yeah. I've had the opportunity to work with founders at Chipotle, or the founder at Chipotle, and now I'm having the opportunity to work with Howard. And the one thing that you have to give your, tip of the cap to is he went from 6 stores to 40,000 stores around the world and created this idea of espresso in the third place that just frankly didn't exist. So,
espresso in the third place.
We probably won't agree on everything, but at the same token,
you do disagree with him.
No, of course, I disagree with my my wife. So it's like we've been married for 25 years. So it's like these are healthy tensions, and I think the good news is he's actually becoming somebody that I think you need these mentors as you progress your career, where you can lean into, like, give me the history on that. Why did you make the decision that you made? And for the most part, we can agree to disagree.
How often do you talk?
I probably catch up with them once a month.
Yeah.
Great. Yeah.
Actually, you don't need vision to do most things in life. If I can see it and understand it quickly, anyone can. That's how I help people thrive. People who know BDO.
Even if we're not where we wanted to be with that industry right now, we will be ahead in the next few years, because innovation that's coming up right now is working much better than we thought.
Let's talk about politics a little bit since we're in Washington. How are tariffs affecting your business?
Well, fortunately for us, green coffee has now been excluded from tariffs, which I guess that happened about a month ago.
Good afternoon, everybody. I am here with Jimmy Donaldson. He is the most followed person in the world. Literally, he's got billions of...
Override Larry Fink. Conversation starts here.
Please welcome Andrew Ross Sorkin and his guests, CEO of Coinbase, Brian Armstrong, and Chairman and CEO of BlackRock, Larry Fink.
Good morning again, everybody. I wanted to try to bring together this morning two pioneers from two different generations, dare I say, to talk about the future of finance at a time when we are going through a remarkable shift in all from the passing of the Genius Act to the surge of stablecoins, prediction markets, talk of tokenization, as well as where we are in our economy. And Larry Fink, of course, founded BlackRock back in 1988. Today, it's the world's largest asset manager, overseeing $13.5 trillion. That's with a T, if you can believe it. Brian Armstrong founded Coinbase in 2012. Today, it is the largest crypto exchange. Grand ambitions to do much more. In 2021, it became the first crypto company to go public and has $500 billion dollars in assets on its platform. So good morning to both of you. One of the reasons I wanted to put you together is you historically, over the years, did not agree with each other at all about this world of crypto, if I dare say. You obviously were a proponent from the beginning. I think we met about a year or two after you began this effort. Larry, you were, though, on the other end of it, even on this stage in the past. You famously, in 2017, called crypto an index for money laundering. BlackRock...
And thieves.
And thieves.
Yes.
Money laundering and thieves. Right. You now have the biggest Bitcoin ETF. So what happened here?
As the secretary said, you got to evolve and change. So, so I did say that. I think I said that in Washington, sitting next to Jamie Dimon.
Larry Fink, our business partner, BlackRock.
But during COVID, when you had a little more time on your head, you worked probably around the world.
BlackRock.
I actually took it upon myself to visit and talk to a lot of people who were advocates of it. I wanted to understand, what am I missing? Why am I? Why do I have that belief? And so I was testing myself like I do in many other things. And so around 2021, 22, I began to evolve those views. Those statements was not about crypto. Those statements were specifically about Bitcoin. So let me be clear too. But I see a big, large use case for Bitcoin, and I still do today. And so this is one thing that I get excited about. I have very strong views, but that doesn't mean
not wrong. But by having strong views, you have to test yourself and ask yourself. And in my role, I see thousands of clients a year. I have governmental leaders, and we have these conversations. And my thought process always evolves. And this is a very glaring public example of a big shift in my opinion.
How much, though, and Brian, you can speak to this, do you think that folks in the legacy or traditional industry didn't either get it, want to promote it, want to be part of it because they were scared?
Yeah, well, this is the classic innovator's dilemma, right? Anytime you have a new technology come around, everybody who's an incumbent has to decide, do we want to embrace it or do we want to fight against it? And in some of these larger organizations, it's kind of funny, actually, because there'll be part of the organization, like their lobbying team in DC, is actually fighting against it, kind of trying to do regulatory capture. But the innovation arm of the company is actually embracing it. And for many of the largest banks now, we're actually powering, pilots with them doing stable coins and custody and trading and these kinds of things. And once in a while, we run into their lobbyists in DC, and they're kind of trying to curtail it. And so, I think it's like any company. You have to embrace change and be on the frontier. It's not unique to crypto.
Is there any chance in your mind at all that Warren Buffett is right? He and Charlie Munger used to call it rat poison and say, eventually it'll go to zero. It just might take a while.
But they're talking specifically about Bitcoin.
They're talking about Bitcoin. But you offer a Bitcoin ETF, so you can speak to that.
Yeah, there's no chance that I don't think that's going to happen at this point. I mean, there's something that happens from a psychology point of view as we all age, and we grew up in a certain environment and we're shaped by the experiences we had. And I think for Charlie and Warren, they grew up in an environment of America preeminence, and the dollar was everything, and how dare you question it? And we're in a world now where democracies around the world are trying to figure out how to curb deficit spending. And, Bitcoin is kind of this new digital gold. People are going to it in times of uncertainty. And so it's tough for them to contemplate a world that is more decentralized and running on the internet.
How much of it, though, in terms of what's happening in the last year, is a function of money being spent? You mentioned lobbying in Washington. So you were behind the political movement that really pushed a lot of this. Directly. You spent about $50 million in corporate donations in the 2024 cycle. The crypto industry spent about $130 million. How much of it do you think is here now because the industry effectively, and some people cynically would say, bought this new opportunity?
Yeah, well, our mission is to increase economic freedom in the world. And I prefer to do that just with our products and integrating crypto into the traditional financial system to update it. But it turns out over time that a big way we can accomplish our mission is actually, holding bad government accountable, right? So if there's 52 million Americans who have used crypto and they want to see clear rules on the books to protect consumers, I think in the last administration, we saw that our representatives in government were not actually fulfilling those values that the American people had. They were actually unlawfully trying to kill the industry. A lot of it went offshore as a result of that, and a lot of consumers got harmed. And so, we've always been very transparent about donations we've made to super PACs like Fairshake, but we also helped bring together a large number of voters to elect pro-crypto candidates. And to me, that's democracy working.
I think we need to get back to what is the purpose. What is the purpose of Bitcoin? Then we get into stablecoin. The $13.5 trillion that BlackRock managed on behalf of our clients, it's basically managing hope. That's all it is. I mean, why would anybody invest in a 30-year outcome unless you're hopeful in 30 years you're going to have the compounding effect? Bitcoin is an asset of fear. And when you're less fearful, like we had a trade agreement with China, you saw a shift downward. There is conversations this week that there may be some type of settlement in Ukraine. Bitcoin fell a little bit. So you own Bitcoin because you're frightened of your physical security. You own it because you're frightened of your financial security. The long-term fundamental reason you own it because of debasement of financial assets because of deficits. And so to me, even the movement in the last week, and we've had a 20-25% drawdown. And this is the third time since IBIT was created, our ETF. And so you see these shifts, and they're actually pretty non-correlated shifts, and that's And so the role...
But then some people say, is that really insurance, right? If you had bought it at $125,000 and it's now sitting at $90,000, you're saying
if you bought it for a trade, it's a very volatile asset. You're going to have to be really good at market timing, which most people aren't. If you buy it as a hedge against all your hope, then it has a meaningful impact on a portfolio. The other big problem of Bitcoin is it is still heavily influenced by leveraged players. It is.
That's what I wanted to talk to you guys about.
Okay, I mean, that's Bitcoin, but we can see, because we see where the flows are coming from. We're seeing more and more legitimate long-only investors investing in it. There was an article about a foundation, endowment just bought a lot of IBIT. But I can tell you there are a number of sovereign funds that are standing by. They're adding incrementally that 120 and 100. I know they bought more in the 80s. Right. That's fine. And they're establishing a longer position. And then you own it over years. This is not a trade. You own it for a purpose. But the market is heavily leveraged. And that's why you're going to have more volatility.
Okay, so Brian, let's talk about that, though, the leverage piece. Because I think we all don't know where all the leverage lies. I think some people look, Michael Saylor has a company strategy, formerly MicroStrategy. That seems like a big leverage bet. He owns about 3%, I believe, of all the Bitcoin that exists. How much leverage is there really?
Well, yeah, I mean, we saw a little bit of this on October 10th this year, and there was quite a bit of leverage that got unwound as the market moved around a little bit. But this largely happened on offshore exchanges, right? On Coinbase, we saw very little of this. And to me, it's just an example of why we need clear rules on the books in the United States. I think 2025 is actually, we'll look back on this as the year that crypto regulation went from kind of gray market to well-lit establishment, because we saw the passage of the Genius Act, which was huge for stablecoins. Yes. We've now seen a bipartisan vote for market structure legislation in the House, and now it's going through the Senate. So hopefully within a few months, we might get a vote on that in the Senate. And then I think we'll have the foundation to really have this industry built in the U.S., and we'll see a little bit less of this kind of leverage or high-risk activity happening offshore.
I want to get to stablecoins and tokenization and blockchain and where this all goes. But you mentioned lobbying before, and I just want to ask you one lobbying-related question. And actually, it can go to both of you because you're both doing something similar, which is that you both made donations to the new ballroom that the White House is creating. We were just talking to the Treasury Secretary earlier about David Ellison making movies and trying to placate the administration, if that's what he's doing. I want to read you what Jamie Dimon said about making donations in this context, because he says that he's not doing it. And he says we have an issue, which is anything we do, since we do a lot of contracts with governments here and around the world, we have to be very careful about how anything is perceived and also how the next DOJ is going to deal with it. So we're very quite conscious of the risk we bear by doing anything that looks like buying favors or anything like that. What do you think about that?
I agree with what Jamie said, and everything we do is with that type of lens.
Right.
Typically our political giving is split between 50% one party and 50% one. How we distribute it, that is up to my public policy team, but we're very deliberate on it. We try to be equal in every category, in every case, but we are very deliberate, and we look through the lens at how he described it.
But Brian, what do you think of that? Because I think there is a view that people are trying to buy influence in Washington, and that it's more available to buy today than it used to be.
Yeah, so I think these are really two separate things. On the one hand, we're an American company. We're proud to be an American company, so we donate to various things like national monuments and milestones, and it is bipartisan, in the way that Larry described. Separately, we heavily engage in lobbying. I mentioned to you this standwithcrypto.org and like Fairshake and all these kinds of efforts. And so those two are separate in my mind, but both important. Like, we're proud to be an American company.
And do you ever worry, to this Jamie Dimon point, that somehow, the Democrats will get into office next time around, or maybe even after that, and then say, you know what? We think that all these donations were part of some kind of quid pro quo or some kind of influence.
Does that mean they're not going to use the ballroom then?
I don't know.
But it's always possible. I mean, these agencies can get politicized. Right. They seem to always get politicized. So anything's possible. But shouldn't stop us from doing the right thing.
It comes down to the ethics of an organization, making sure you're looking at the entirety of what you're doing in a balanced and fair way through the lens over time.
Okay, let me ask you a different question, Larry, because you just wrote a piece in The Economist about tokenization. And I think that tokenization, some people here will know it well, some people will not, so maybe you can help level set. But I think you have a view that tokenization is effectively going to change finance forever.
Yeah. Want to explain?
Explain.
Okay. So there's so much conversation going on about AI and how AI is going to be reshaping the world. There's not enough conversation about how technology is going to be reshaping the financial services area too, and the need for democratization, as Secretary Bessent talked about, the democratization of investing in America. There are slews of middlemen in the whole financial services area. We have elongated settlements, elongated processes. If we could digitize every asset, so if we digitize all stocks and bonds and have more seamless going from a digital wallet of cash or a stable coin into equities or bonds through in most categories through an ETF. It will reduce the friction costs, the transaction costs, and it allows a much more free flow. So there's $4.1 trillion of money in digital wallets globally, sitting in stable coins mostly. And can you now, and right now, if they wanted to go into a bond or stock or have a real estate transaction, they have to take the money out of the digital wallet into a traditional wallet. And have all those commissions and fees and all that stuff. So the whole idea of tokenization of all assets, including real estate ultimately, is to just reduce huge friction costs, making investing easier, simpler. So what they talking about this one account, you can do this all through your app. And it's going to allow a more, I would say, a free-flowing process of investing.
Brian, if all of this happens, how does the finance industry change? Would you short all the credit card companies, for example? Because invariably,
digitization of a dollar.
Well, that's digitization. I mean, we can also get into stablecoins, which is the other piece of this, which is in some cases required for all of this. We didn't really talk to the Treasury Secretary about it, but underlying all of this has to be lots of treasuries, which a lot of the banks, I went to college out there, frustrated or anxious about. Some of this has been the idea that there's going to be a flight of capital effectively out of the banks that's going to go to effectively support the stablecoin business, which ultimately will support in large part some of the transactional issues and potentially even some of the
you gotta shovel your car out.
Well, in that case, I think that's just the banks trying to protect their profit margin. I mean, they should have to pay rewards and higher rates to their own customers. And I think they're trying to put their thumb on the scale of regulatory capture, essentially, to prevent crypto from doing that. But my prediction is actually the banks are going to start, we're already seeing this actually, they're going to be increasingly embracing stablecoins. And my guess is that in a year or two, they'll come back and say, actually, we want to be able to pay interest and yield on stablecoins in our own companies. And so it goes back to that innovator's dilemma situation. I mean, the best banks are leaning into this as an opportunity, and the ones who are fighting it are going to get left behind.
I would say as a country, we're late.
We're late.
Yeah, we're late. So
who's ahead of us?
India and Brazil.
China.
So this is the biggest issue. We are a successful nation. So much of the foundation of our success has been the role of the capital markets. And this, if you think about how the U.S. economy was able to restabilize itself faster after the great financial recession, is because of the role of the capital markets. Now that the Secretary was talking about the role of private credit, but it was really the capital markets. And we are now starting to see in Brazil and in India a whole transformation of a digital economy. And they digitize their currency. Now, they even have credit card purchases on the pipe in Brazil itself, the PIX. And so what I am worried about, we're not moving fast enough. And, and so I didn't put this in the article because, I didn't want to be that vivid on this. But this is one of my big fundamental issues. We need to move faster. We need to move faster as a country, even in AI. I mean, you haven't asked the question. When people say, is there an AI bubble? I ask, well, if we don't continue to spend on this, and that means we're going to have some failures and some success stories, but if we don't spend enough faster in AI, digitization, and tokenization, other countries are going to beat us.
So you think, by the way, actually, I'll ask the AI question then. Do you think we're in an AI bubble, and do you think the economics of this are all going to make sense? If we were sitting here all together 5 years from now, where we say that we vastly overspent,
Look, a number of the hyperscaler CEOs that I've had this various conversation, they're not certain if they're overspending or underspending right now, but that what they're certain is they're seeing it right now. Most hyperscalers are short compute. There's not enough happening. The amount of demand for this.
Right.
That being said, the timing of this build out may underperform their investment criteria, but they're certain that the demand will be there. This is why I love a capitalistic market. I'm not here to suggest there's not going to be some, headline blow-ups. I mean, there are going to be some huge winners and huge failures. I mean, it gets to this economy. But I would say there are going to be just incredible winners. And I've raised this question with politicians. Does that mean we're going to have $5-10 trillion companies? What does that mean societal? How are we making sure? This is why I love the new children's account, because how do we broaden the economy if these hyperscalers are these massive winners?
Brian, let me connect this back to tokenization, because one of the things that we're seeing is there's an effort now to tokenize private companies, a lot of private companies in the AI space that are not public. They don't have the same disclosures that you have, but people are going to eventually get access to some of this stuff. And some of this might ultimately, by the way, end up, right, you're looking at me askance, Larry Fink.
Yeah, I haven't heard this one.
You haven't heard this one?
No.
There's a bunch of companies that are now being, Robinhood and others have tried to are effectively trying to tokenize private companies so that you could sell pieces of those private companies to the public without the same disclosures. Mm-hmm. What do you think about that?
Well, in that case, I think they had some footfalls because you have to do it with the permission of the company, right? So I don't think that approach worked very well for them. But if you just zoom out for a minute and say, okay, these companies are staying private longer, right? Sarbanes-Oxley and all these things made it more difficult to go public. The amount of demand for capital in these private companies is just going to keep growing and growing. And there's so much money in crypto. How can crypto update capital formation just like it's updated every other part of the financial services area? So there's a big investment that we're making in how to update how to update capital formation and make it easier for private companies to raise money, but we want to do it with the permission of those companies.
Ultimately, do you want to compete with Larry? Do you guys think that you're competing with each other? Because you've talked about broadening your offerings far beyond crypto.
No, I don't think so. In fact, we're a great partner of theirs on their ETF. Right. We're powering, I think, more than 80% of the ETFs for crypto in terms of custody and trading. And as there's an effort to tokenize their funds, Coinbase is well positioned to be the leader in just tokenization of every asset. I mean, we've done that with stable coins. You can look at it happening now in various parts of the world with stocks. It should be happening with every fund. And what we want to do is actually market their products to our customers, the $500 billion of assets that you mentioned for retail and institutional. We want to put those products in front of our customers. So I think we'll work well together.
You mentioned IPOs and governance issues. I wanted to ask you a governance question. You are moving your company from Delaware to Texas. Mm-hmm. You are following Elon Musk, effectively.
And lots of companies, yeah.
Tell us why, and do you think that this is interesting to me because Larry, on the other end, I don't know if you think you're on the other end, historically has represented shareholders who want to have access to vote for things, and the shareholders going to have less access to vote for things likely in Texas.
Yeah, well, we want to run our company in a business-friendly jurisdiction. I mean, it's pretty simple, right? I think Delaware historically had a great monopoly on this, and they had a lot of trust in the courts and everything. But recently, we've seen really unpredictable outcomes from the court. We've seen hostility toward founder-led companies, and they're not deferring to the judgment of these boards. And I think even on your show, Andrew, the governor of Delaware came on and kind of made dismissive comments about one of the leading entrepreneurs of our time. And so that was a bit of a head scratcher for me. I mean, how are you going to have people come incorporate in your state if you have this anti-business rhetoric, right? So luckily, the founding fathers in the United States had this brilliant idea called federalism, where we have a free market competition amongst the states. And we had some meetings with the folks in Delaware. I think the legislature was doing a good job trying to fix some of the court outcomes. But ultimately, if you want to get reform, you don't try to just use your voice internally. You have to lead and align incentives and punish bad behavior. Otherwise, they're not going to reform themselves. So we're happy to be in Texas, and they seem very business friendly. And
but when you say business friendly, shareholder friendly, or you're saying founder friendly, is what you're saying?
I think both. Yeah, I mean, it's business friendly in the sense you can just get things done quickly. They're not going to allow somebody who owns one share of stock of your company to rack up hundreds of millions of dollars in legal fees. So I think it's business friendly. I think ultimately people can choose which company they want to invest in. The free market is the right regulator of that. We don't want unpredictable outcomes from courts that are doing activist.
Larry, you like Texas? You want to move to Texas?
I mean, we were one of the original founding investors in the Texas Stock Exchange, unrelated to this topic. But I want to just link back to, yes, we're responsible for all our clients' equity investments. And, we've offered the right of each of our clients to vote their own shares. But let's just get back to tokenization. If we were able to tokenize every stock, we would know instantaneous the asset owner of record. So I would be transacting the trade on behalf of that owner of record. If we tokenize, we ultimately democratize everything related to voting. Every holder of the asset will have the ability to vote.
But the argument always has been that most retail investors don't vote. And as a result of that,
but if it was on an app on a phone now that it is so easy and clear,
rookie mistake.
It can't, technology can't help that education.
Okay, but then the question is, if you're running a company, by the way, you're the CEO of a company too that also represents shareholders. Is that a good? I mean, if every quarter you have, or every year rather, you're funding proxy battles every year as it is. But if the democracy gets even larger, meaning if everybody, then you're going to be having to run massive campaigns every year.
No, but I think the SEC is also trying to clarify proxy access. So and Paul Atkins already said this is going to be one of his.
Well, but one of the things that we've heard that the president wanted to potentially sign an executive order that would actually prevent big funds like a BlackRock or a State Street or your competitors effectively from voting those shares on behalf of shareholders.
Rumor two.
Yeah.
So let's be clear. If that became a rule, if that became an executive order, that means foreigners will have more power voting in the United States.
Say that again?
If they disallowed index funds to vote at this moment, it means foreign investors would have a greater percent of the vote. Is that an outcome that we want? Two, it would put much more power with the activists investing. I can tell you, almost every CEO who approaches BlackRock of this is frightened of that outcome. That because if the index investors own 30%, 40% of the shares, if you take that out, it really will create very skewed outcomes. And foreigners will have a bigger role in the voting process, as will activists. Is that the outcome? We want to see instability at the corporate level if that happened. I mean, last year we voted 98.8 with management, and there's only a few instances where we vote against. And so, and as I said, if we get back to tokenization, which we're excited about, every asset owner of record of that moment will be the ultimate voter of record.
We've only got about a minute and a half left, and I have two questions for you. One is just, so 30 seconds each. Where do you think we are in the economy right now? If we were back here a year or two from now, would we be in a materially better place? How do you see the markets?
Can I fill out an application for that job?
I mean, I'm an optimist, right? I think that it's kind of a golden age for freedom. It's happening with democratization of access to these different products with crypto. We're seeing prediction markets really start to flourish. We have regulatory clarity now for stable coins. We're seeing it emerging, hopefully, for market structure. And the U.S. feels like it's back on offense. We have a chance to go update the financial system with crypto and just get a lot of the friction out of the economy. Going into the midterms, who knows? Maybe the government will want to juice the markets, do some more rate cuts. So I'm generally optimistic, and we try not to get caught up in any short-term trends. We just try to build good products and play for the long term. Larry, what do you say?
So, managing a large, 40-something% of our assets are foreign-owned assets. They have a 70 to 80% allocation of their portfolio in dollar-based assets. This is the place where they want to invest in the opportunity. Obviously, earlier this year we saw maybe a 3 or 4% reduction, but they're still heavily overweighted. And so I think that is one of the great powers that there are very few destinations where capital is seeking long-term opportunities. That being said, we have to ask the question, why is the job market in 2025 so anemic? Last year, the job market averaged 154,000 new jobs every month. This year, we're averaging 31,000 jobs. That's not part of the conversation. The question is,
per month.
Is it the uncertainty around all the policies that are being created? If that's the case, when there's more certainty, are we going to see a surge in job growth next year? Well, that's an inflationary outcome. The counterpart is, are we seeing this anemic job market because the futures today, we're now beginning to see more labor substitution because of technology. That's a very deflationary outcome, but that has a profound impact on how we navigate.
Which one do you think it is?
I think it's both, but I think the trend of technology, you're starting to see that if you look at corporate margins, especially the leaders in every industry, are winning more and more share. So we are seeing this K economy developed in every industry. And what I think is happening is more and more companies are doing more with the same amount of people or less people. I mean, if you think about the ratio, I think about BlackRock, our revenues are up 40%, our headcount's up 5%. Okay, so our margins are up about 300 basis points over the last few years.
Gross margin 40%.
And so with technology, you're able to transact more volume, more business. You have more technology doing much more of the fundamental, the backbones of what we do as a firm. Having $13.5 trillion, we do a lot of trades, and we have thousands and thousands of different criteria that each investor gave it. It is all done through technology. And so this technological change is happening today, but it's going to have a profound impact on our economy. It's going to have the biggest impact is what do we do with our university system? We built a university system in the United States based on white-collar jobs. That's going to be changing with technology. How is that all going to be reshaped? We need to be answering these questions, and I don't hear people asking the questions.
They are important questions. Final question to you. You had a viral moment talking about the finality of at the end of your quarterly earnings call.
2026
we've been having discussions about poly market and prediction markets and everybody betting on what people are going to say at any given moment. And you read off the words that people were betting on the call. You said Bitcoin, Ethereum, blockchain, staking, Web3. Tens of thousands of dollars had been bet on each of those words. People were betting on whether you would actually say those words, and then you effectively were trolling them, I think.
It's going to be all right.
Can you tell us? Tell me what you think about that, and what you think about prediction markets if you can effectively determine the winner in such a way. And by the way, there's lots of folks who are now betting. There are people in here. I heard there are people making bets about what was going to happen at DealBook. CNN just made a contract with Kalshi, apparently, to have people bet on news.
I'm not going.
What were you thinking during the conference call?
Wow. Yeah, well, the conference call was me just having a little bit of fun. But I think the bigger picture here is that prediction markets are a big deal. And it's for 1% of people, they're trading it just like another asset class. But for 99% of people, they're looking at it as an alternative, I think, to traditional media, actually, to figure out what's going to happen in the world. And then some people are also just using it for entertainment, right? So it's a very interesting new area. I think that actually we're going to see even more potential here. Like an example would be policymakers could actually use prediction markets to say, okay, of these three policies, which one will raise GDP or which one will lower unemployment the most or whatever metric you're trying to get. And it'll get signal from the market about which policy to actually go implement. So it's one more example of this trend of kind of taking.
Do you worry about manipulation? I mean, that's the other big part of it. And by the way, you effectively manipulated the outcome.
Yeah, it's all
well, I didn't trade on it, of course. But
listen, I'm retired, man.
I actually had a really interesting conversation with one of the folks that was nominated to the CFTC commissioner about this, and he asked me, he said, "Do you think we should allow insider trading in prediction markets?" And I said, it's actually it's not as clear-cut question, right? Because if your goal is to actually, for the 99% of people trying to get a signal about what's going to happen in the world, like is the Suez Canal going to be reopened or whatever, you actually want insider trading. You want, some admiral sitting on a ship in the Suez Canal who has really good information to be trading, so you get better, higher quality signal out of them, right? Now, if you want to preserve the integrity of those markets, maybe you don't want insider trading, right? So there might be like a decentralization test that has to go in here, but it's not a clear-cut answer. Larry, I don't know what the vetting you're going to say, but you just sort of made a
people
face.
are, just stressed out. Everywhere you go to the store, there's a huge line and people are just waiting.
We try to help people navigate a 30-year outcome.
People start arguing while they're at the waiting line. I'm like, we're already
I'm aware of the betting market. In football, you can bet every play. I mean, to me, this is not how I'm going to live my life.
Larry Fink, Brian Armstrong, thank you both very, very much.
I'm picking up random chocolate. I want a Twix bar. Let me get some Hershey's. For real, man. People are like, you mind if I cut it? I'm like, go ahead, man. I'm retired. You good. No problem. I learned to slow down. I was stressed out since I was born, so no more of that. I'm done. I'm on a stress diet. That little girl reminds me of my granddaughter right there. Like I'm at that stage in life where I can just, wow, look how peaceful they are. They have no worries, yo. And then we grow up and we're like, oh my God, the mortgage, the insurance, the light bill, the water bill, the goldfish has to go to the veterinary. We got to feed the puppy. It's just so many things, man. Only in this country. Overseas people have less and they're so much happier, man. For real. Because if anything happens overseas, somebody will cook something and play some music, and people will just start dancing. Here, man, listen. I have family members. I could give them a Lamborghini. You know what they'll say? But it's a 2004. So thank you, but come on, man. Nobody gave me a Lamborghini. You know what I'm saying? Overseas, a Toyota Camry or Honda Accord is a Bugatti. Where I come from. You get what I'm saying? Overseas, it looks like a spaceship because you don't see so many of them. Here, you look in every direction. You name a brand or a model, you're going to 100 over here, 1,000 over here. You go to car shows, you're like, man. But yeah, I've learned that, man. Like, even when you go overseas, right, on the beaches, they have these gazebos, right? The beach is free, but if you want to sit in this beautiful king-size bed with the cover, it's $200-300. Man, listen, I put a blanket right next to this thing, and I'm on the beach. $3.99. What's the point? After the sun goes away, I don't need it, right? So now everybody that paid top dollar, I'm just looking at them like, you see, I spend my money on beer. You spend your money looking nuts. Because people want to do the selfie. Yeah, I'm in the cabana here on the beach. Everything is free, but you want to be. What happened to get a blanket? Some Chef Boyardee, that's it. Some sandwiches. What else? Kids want hot dogs and burgers and chips and juice and Capri Suns. You give them that and just tell them go play. They're gonna run, make moms. They're gonna do whatever they can, to have fun. Man, listen, my nephews. Oh, we need to rent a jet ski. For what? The water is right there. You want to get wet? Jump in the water. You don't want to get wet. You want to be on a jet ski? Yeah, right. You better jump in that water. Man, I turn into Aquaman in the water. My imagination is wild, man. For real. I do not need to be on a fishing boat. I don't need to be on a yacht. I don't need a jet ski. None of that stuff. I just need loud music because, as you can see, I can't live without music. And the internet, because I'm gonna surf the web. I'm gonna be on YouTube World non-stop. That's it. No stress, man. And I'm gonna eat a lot of chocolate. I'm gonna watch some funny ass comedy shows at night. That's it. That's my retirement. Stephen Colbert, Jimmy Kimmel, Jimmy Fallon, Seth Rogen. Oh man, Joe Rogan. He's fucking hilarious, yo. He's like the new what's this guy's name, with the curly hair and the glasses. He's the most famous talk show, but he talks dirty. What is this guy's name? Anyway, Joe Rogan is the new version of him. He's the most famous radio personality, Howard Stern. Damn, Howard Stern. Yo, legends, baby. Then I'm a veteran, so everywhere you go, you see veterans, you salute them. It's like, oh, we got a Patriots fan in the house. That's one of my brothers in arms right there. Even though I got traded to Tampa Bay with Tom Brady, I had to jump in the luggage. All right, Tom, come on. Oh, where I got my... See, I got my Buccaneers, you know what I'm saying? I got to represent. I got to represent. But I have a lot of wild card teams. I love sports, so my kids play sports, stuff like that. So got winning, got first. My baby boy, it's either Florida State or Stetson. I teach in Stetson, so I'm like, oh, it's right down the street. But he's a baby. It's his choice, his decision to make. But yeah, it's going down. Let me show you a picture of my son. You guys don't get to see this because I always have my vest on. But my baby boy won the Triple Crown in California. 3 championships, 3 weeks in a row. Of course, state champion, it's my baby. But if it wasn't for this sack, none of that would have happened. So, this is my baby. So, for my music career, I broke the World Guinness record this year. I released 1,218 songs, and I'm not recording till tomorrow. I have bigger records than that. 2024, I did 405. That was my worst year. But 2023, 2,545. 2022, 2,600 songs. 2021, 987. So I have all the records for it. But the last one was named after this, so I don't want to do another one. It's like my son's moment. I have to let him bask in his glory. Ay, coño. Hold on. We must. Oh, because this was this. Oh, paper. Woo, it's cold, 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 cold. Okay. We have a few more minutes. Let's see, where can we go?
If you love to travel, Capital One has a rewards credit card that opens up a world of possibilities.
We're going to send this to corporate, of course, and we want to keep everybody motivated.
Plus, get premium benefits and a collection of luxury hotels when you book on Capital One Travel. Capital One, what's in your wallet?
I was asked under oath in a congressional hearing to
Mike,
that we would never again produce any more energy than we were at that point in time. And some of the other companies that were at that hearing agreed to that. I did not, because look, the demand for our products is going up, not down.
Well, Wall Street Journal on YouTube. And we're going to segue. We have a jersey to pick up.
Let's get the big question out of the way first. Do you watch Landman?
I do.
You do? What do you think?
It's a great show.
Is it a good depiction of your new home in Texas?
Well, I mean, a good show needs to take some liberties with reality and create some drama. And so there are certain aspects of it that are actually very true.
Oh no, it's my goodness. Are you serious? Yes, indeed.
West Texas.
No worries. Yes, indeed. Look, this is, of course, it's my last album. the NFT changed. Once you listen to it, it changed. This is the SSC Tuatara. I know you're a car guy, so you probably heard about this car. The cover is the same graphic that you saw on the hoodie, but because I already listened to it, the NFT changed. So this is my last album, 31 songs. This came out on November 19th, and I have not recorded since because this is my son's moment. You know, I didn't want to. You know, it's his moment. So January 1st, I'll be back in the studio tomorrow to work on some more stuff. But yeah, this is, if you look here, this is my music page. But take a look right there. That's a Lamborghini Essenza. I don't know how much you know about it, like hypercars. Yeah, I'm gonna show you something. You're not gonna say anything to anybody, okay? But I'm gonna show you something. A little something, something I got around here somewhere. Let me see. All my life is on social media, so don't worry. I've been an artist my whole life, so none of this is new. One quick second.
Sienna, what are you doing?
Yeah.
It's international.
Let me see. Okay. Not this one. No. Come on. It's not the right one. Oh, that was the right one. This is on the 4th of this month. What the hell is it? Go back. And yes. Hey, by the way, there's only a few in the world. I own a few of them. But this is my black one. This is on the 4th. It took me 30 years, by the way, to buy it. So. But that same vehicle you see on my avatar is this car right here.
Just right. We're not even going to wait. I'm just going to teach you.
That's the Lamborghini Essenza. I have to get placed to drive it overseas. But this is one of the cars in my portfolio. Let me show you my LinkedIn here. Because it'll make more sense if you see my LinkedIn. You read right there. That's me. That's the guy but I'm still, negotiation status. I'm still working on things. It's not like things are not perfect. Things are not what people, think that it is. It's a lot of hard work, man. All right. This is before we acquired the car. I have a few other ones in my portfolio as investments, but this one is mine. 1 mile. 1 mile. Now, I'm certified Ferrari as far as sales. I can sell you anything. I do engineering for Chevrolet. This car, when it was still under the Lamborghini branch, you couldn't own the car. They'll ship it to your racing event, and they hold the car and they have it through maintenance. But I got it on a trade at Ferrari, so now Dominican Republic. Once I get the plates, I can drive it 5,000 miles every year. Every year. So that day, I had to pick up like $40 million worth of inventory within 30 minutes. And as of a consolation, that's how I got that car. Yeah. No, like it's an investment. They're all for sale. This is what I do on a regular. If somebody says, yo, I'm looking for, and we can cut a deal, I can't fall in love with them. I have access to too many cars. You get what I'm saying? The Ferrari collection that I'm on top of is over $400 million. So and again, those cars sell like once a year, once every 2 years, or once every 3 years. It's not every day you're gonna get a sale for that car. But if somebody calls, just give me the right to. If I can beat the price, you get the car from me. If I can't beat the price, then I understand. But that car is very, very, very special. I don't know if you've ever seen the Hot Wheels concept car, the 2025. I think I can build that car from the assembly. Yeah. That would be, if this Warner Brothers stuff goes through, You already know. I'm like, yo, cut into it, modify this, because we can't until we, like I said, it's an investment. It's not something, I have business partners. I'm not the big, no, I'm the little water guppy in the ocean of these giants. I just want to get the crumbs. You know what I'm saying? So
The crumbs add up.
The crumbs add up. And that's the key, it's like being able to wish somebody success when they have it and knowing my position. I don't have to be the number one guy. Like I'm the guy throwing out the trash. I'm the guy you're least gonna expect because I realize that attention is not always good, and people do treat you differently. People do treat you crazy, and those cars are powerful. They're very nice, but you can kill yourself in one of those cars. You know what I was telling a client yesterday? I sold the Aston Martin DB11 hardtop. He wanted a roadster. We're gonna try to get him a roadster, but I got him under 160,000 with less than 12,000 miles original car. And I told him, do not believe what Motor Trend, Road and Track, and Car and Driver say about this car. You see, it says, oh, it does, 60 in 2.7 seconds. Don't believe that. If you floor this machine, this is not a racetrack. You're on the street. It's not going to take no 2.7 seconds. You're probably going to do 100 in 1.1 seconds because you're not going to realize the power. Inside the cabin, you can't feel it. But when you look to the side, things are just one wrong turn, you could really hurt yourself. If I take you on a racetrack with a race car with 200 horsepower, I guarantee you people will never drive fast again. So imagine you have cars from the factory that come with 200, 300, 400 horsepower, 500, 600. The challenge, yo, how do people drive that? Yo, that car, once you hit the gas, you're in the air. You have no traction. In a straight line, man, listen, those cars are very good, but man, once you turn, you're talking about 700 horsepower. Okay, I'm from the era where Lamborghini was 497 horsepower in the Diablo era. You're telling me Dodge has 700 from the factory with a warranty? Yo, that's unbelievable, man.
Adam, 1990 Mustang GT for the drag track, but also as daily driver.
That's the 5.0 Fox body?
Yeah.
Yes. Classic. Those cars stand up.
Yeah, first gear, it stand up. It's still standing. When I go to shift to the third, it sits down.
Oh my!
8.5 seconds, 168 miles an hour.
That's what I'm saying. Like, you know how fast that is? Like an aircraft could take off at 100 miles an hour.
Yeah.
Yo, damn, that's a spaceship, man. You don't have a car. That's a spaceship, yo.
Well, I don't have it anymore. That's when I was married to my first wife.
No, don't worry. When this Warner Brother thing goes through, what we got? We got an Eleanor coming. I got you.
Oh, yeah?
Yeah, for sure. Yo, I swear to God, before I give everything to taxes, every day I look for somebody to donate $2-3 million to every single day. Every single day, dude. Because they don't need my tax money for what?
Yeah.
No. I could just help God's people.
They get enough from everybody else.
That's it. Right? Oh, yeah. I'm looking for every excuse. I'm writing off every McMuffin, every ketchup packet that I can, man. Listen, let me tell you.
So once they got some on the truck today. My wife gets the honey and the barbecue and mixes them together on our sandwiches.
Oh, nice.
Honey last night.
Oh my goodness. I seen the truck earlier. I don't know if they're probably finished now. But that's hilarious. Yo, but I promise you, this one thing, I told God, if you're gonna give me the blessing, I'm gonna take it with a responsibility to help your people. And that's what I'm gonna do. Half of my life, building the fortune, the rest to give it away.
I settled for a Honda Accord.
Oh, I got you. A brand new one. Come on now. It's all good, man. I swear to God, yo. I'm telling you, I pray every day, yo, every day. God gives me this. This is the biggest one right here. If I can close this deal, forget about it. All right? For Mr. Clarence, I got the convertible Corvette with the stripes on it.
Convertible Corvette.
Hey, we're gonna hook him up. I got him. Convertible. I gotta get him my SUV too. It's cold out here.
Yeah. With extra heat.
Yeah. Nah, I'm taking y'all with me, man. I swear to God, yo. Watch.
I have a deal ride.
Can you imagine everybody comes to work, there's a fleet of Corvettes all over the parking lot. Right? Yeah. Yes, indeed. Yeah. But let's ride out. I gotta go pick up a jersey. You heard me. And yo, we'll be right there, Zach. Yo, but you know what I noticed? Let me see if I did this right. Oh, you know what? I'm gonna Bluetooth to the other channel. So I want you all to have an amazing day today. May you conquer everything in your path. May everything that you touch turn into solid gold, bars, and silver bars, and beautiful and precious gemstones such as moissanites or laboratory-grown diamonds or any laboratory-grown gem. Always remember to dream big because dreams come true. It happened to me, and I know for a fact it's going to happen to you. We'll see you in the next one. Got to go to the yacht club. Got to go work out. Got to go help the family out. And I got to pick up my jersey. My jersey is prepared. I'll pick it up. Then later, I have to pick up my shoes for tonight's performance. That's it. Love you guys. See you in a little bit. Only a few more videos left, and then guess what? 2026. Holla at your boy. Got the best teacher in the world. We'll do the modules for chapters 3, 4, and 5 at the barbershop. Holla.